Excellent. Hi, Brianna. Oh, wait, her still connecting. Okay. How was your day today, Kathy?
Oh, it was just fine.
Yeah, just another Monday.
Yep. Another Monday. I'm having, I don't know if you figured it out or not, but I'm having trouble trying to get the same kind of screen that Emily has. You
On
know, reviewing the stocks and all the charts and stuff like that. And
sure they're going to walk us through getting all that stuff set up, because basically what happens is when you open an account, you're just getting a blank canvas. So you basically have to customize it as to everything you want to be able to look at. So I was kind of playing around with it today, but definitely I think that's something that they're going to walk us through on how to set it up, because you have to customize it based upon what you want to look at, what stocks are important to you, and what kind of tools you want to be at your disposal. So I'm pretty sure that they will walk us through when we get to that point, which is kind of why she wanted us all to be on the same platform, so that way we can all kind of like work on it together without being too technical. With one's platform is a different interface than another. So I think that that's more than likely what will happen. We can definitely ask that question tonight, because you're, I think, like the second or third person that has asked me that.
yeah.
But I don't have a definite answer, but I am safe to say I'm sure they will walk us through how to set it up. And then I guess it would be,
I was doing the homework and I like, well, let me see, let me check out another stock. Let me see if this stock's worth. And I'm like, well, I can't, don't even, I couldn't even, I could put the stock in, but I couldn't get to the place where you would see that chart that they were, showing us, like the up and down and the, the history of the stock. And so I was like, well,
I started playing around with it a little bit this evening before class. So yeah, I was kind of like trying to add like the main stock market indexes, and then I was adding different stocks to look at. But yeah, no, I'm pretty sure that that's something that they'll walk us through on how to like customize that, to get us all the information that we need.
so was the gold stock worth buying?
Um, I was reading a whole bunch of stuff today. A lot of people are forecasting September to sink a little bit. Oh, 1 second. Hang on 1 second. Robocalls, but sometimes when it pops up as Marathon, Florida, it's actually like a local number, but my phone knocks it off as spam. So, no, I was reading an article today that basically said usually after strong earnings in July and or August, September usually falls off. So I guess it'll be interesting to see what happens. And, we can pick Emily and Jake's brain as much as we can, but, even then they won't have the right answer for us. So it's one of those.
Well, I'm talking about the homework or homework assignment.
The market, you ride the market, and if it crashes, you sell. Yeah. But what was the homework assignment question?
Yeah. Yeah. Did you find out if this was the stock worth? Did it fall in our parameters?
I'm gonna say no.
Yeah, I did. That's what
I mean, your risk is not even with your reward, at least the way that I figured it out. I guess we'll definitely factor that in and see. I got like a 1.1 to a 0.9.
Yep.
Okay, so yeah, no, Jake was wrong. He gave us bad advice. Don't listen to Jake.
Yeah.
But yeah, no, I did it all. When did I do the homework? I did the homework yesterday afternoon. It was a crazy week last week. Absolutely crazy week with everything going on. So I finally was like, okay, I have to do this Sunday. And I was like, I did it literally before I got the emails that were sent out to everyone to remind them of all the events going on. So, yeah.
Yeah.
All right, people, I'm in the room early. We're ready to go. What's everybody slacking for? Sorry, one of my really good friends is a DJ and live streaming a live set from her house right now. So I'm just like with the music in the background.
Uh-huh.
Hello, Miss Emily. How are you?
Guys, how are you?
Fantastic. Thank you. How was your Monday?
My Monday's going well. How about you guys?
Busy, like always.
I can imagine. I can imagine.
Chatter with Jake this afternoon. That was
Oh,
great.
you did? How'd it go?
Very informative.
Cool.
I sensed a little Jacob reserved hesitation when Jake was like, well, I'm going to challenge you on your liquidation philosophy. And you sat back very quiet and reserved, like, somebody's going against me. What is this?
I wish I was there for that.
Oh, it's recorded.
I love Jake. He's wonderful, but he was trying to. We were talking about the difference between barterability and liquidity, and his whole exit strategy is his whole thing about liquidity is that's his exit strategy. So he was trying to, and I used the analogy of having things like brooches and pins and jewelry and grandma's tchotchke jewelry that you always have the nice stuff because that has barterability to it. So yeah, but then you have to sell people what are worth. And I'm like, no. Barterability, that is what you are trading. Like, it's not about being liquid. It's what am I going to get for this? Here, I've got this pendant. I want to buy your car. Trade. Like, it's not about.
We did before currency, before we actually had currency.
Exactly. So that was the thing. I was like, you want to come after me?
Hey, Derek!
So he was, I know what he was trying to do, which was very cute, but I was like, that's not why I made said statement. And I'll win, but I didn't do it vocally. I did it, very politely. I was classy about it. Look what apparently I bought during my sleep.
Oh, that's nice.
It's cute.
Right? And then when you don't want it, you just take it off and it looks like it's like, a scarf thing.
Yeah, I like it.
We had to wear them in Colorado, so we've got this. Okay, so Derek's here. What am I thinking? Wait a minute. Yeah, Derek. So we got Matthew here. We also have Miguel over here. Come over. Say hi.
Hello.
Hi.
So he watched a couple of the trainings today, right?
Yeah.
Like the first one. So he's trying to get caught up, but he's going to step in and see what's going on. Is Allie coming down?
I don't know. No, she went to go get ice cream for her friend.
Really? No.
Yeah.
Well,
And that is key. She's
Well, I
failing
hope
right
she's getting
now.
ice cream for every one of us. That's all I have to say.
oh, Mark said something.
Not really.
No, let me find out. You guys coming on? So how's your weekend, Emily, my dear? Oh my God, your Facebook post broke my heart.
Oh, don't even.
Oh.
Still sleeping, crying.
Oh, that's
So out of it. I know.
I'm sorry.
Oh God! Yeah, for those of you that don't know, Chadwick Boseman. I'm sure you all know that Chadwick Boseman passed away, but he was one of the major people that influenced my son to start his acting career. So yeah, we have not been taking that news very well this weekend. That's all I gotta say. So I'm actually glad we've got 2 hours to keep me distracted. So let's get to it. How is everybody doing?
Good,
Did
fantastic.
you want to cover anything? 'Cause
Good.
Jacob, just in case we run over, did you want to cover anything now?
Hi,
Before
Pam.
hey, Matthew,
Let's
you
see.
want to
Hi,
cover
Emily.
something?
Hi, Pam. Can she hear me?
Yeah, they can
Oh.
hear you. I'm not muted. It's right there. Okay.
Anything you want to cover before I get started, Jacob, in case I go a little bit over, but I don't plan to.
Um,
I can sure.
thank you.
We
Thank you,
class
guys.
next
We're-
Monday, it's
so-
Labor Day.
Yes, next Monday we're not having class because it's Labor Day. And on Wednesday, the class will be started by Elise or Derek because Bo and I will be on the flight. You guys should be getting your emails with the videos and the homework assignments and everything like that now. Bo's done a very good job of getting that to you guys. I'm very impressed. Let's see, what else I want to mention. We have, next week we're in Colorado. So we'll be having our meetings in Colorado. It'd be so cool for
What
you
are
guys
you
to
doing
see.
in Colorado? I didn't know that you were going to Colorado. What's happening?
Yeah, we're opening our second Sherlock's Holmes Foundation location in Colorado Springs. It's really exciting. Do you remember my girlfriend Jessica?
Bring that stuff over to DC. Come on, you need to come up north.
Actually,
Seriously.
Oh my God, Emily, you're in DC.
I'm in DC. You know we need it here. I'm not going to say anything else other than that.
See?
so we had a grant get brought to our attention to basically get a house started in DC. So we're working on filling out all of the preliminary paperwork to file a yes for a meeting that is supposed to be had at the latter half of this week. And then we have until basically the third week of September to pull everything together and make a presentation and then see if they select us. And if they do, then we find a house in DC and here comes house number 3.
Period.
It would be a 12-bedroom facility, or it has total 12 beds. And it's
That's
a
awesome.
$100,000 grant.
Yep, because you know it's needed here.
Yeah, it is. And I would honestly, this place is for rent. And when my lease is up, or if I have to break it to go up there, I can do that. And because, you know, we've done a really good job keeping up this house, but it's really cool. But yeah, if we're going to use this opportunity for the grant writing to get further as far as the foundation, like structure for the foundation to get things moving.
Mhm.
So it's scalable. But then if we get the property, or the grant, will be expanding into the DC area. And we'll just keep going and going and going till we have one property in every state at the very least.
Awesome. That's cool. All right.
Thank you. So I wanted to, yeah. So for those of you who are under 25, Gen Z on your investor party, if you go into your app, there's a new tribe for those of you who are young. So those of you who are 25 and under, you guys can actually join Gen Z, and that's how you guys are going to communicate and share articles and talk to each other about investing and stuff like that. So Niels was the first one to join because I said it the other day. So you need to go on and add. So for those of you who are under 25, go on under and you can join Z. Is it called Z Tribe? Is what the tribe is called. Z Tribe.
And where do you find
So
this?
it's to go open your app.
Oh, okay.
You didn't download the app yet?
No, because I'm still waiting on him.
It's the first thing you see in that welcome email. Here, click here to download the app.
And what is it by investor
Even
party?
Miguel downloaded the app. He's also listening to Rich Dad Poor Dad. He's got to the point where they were making counterfeit nickels. I love that part. It's hysterical. It's like, what? We can't do that? No, you can't. It's hysterical. But that's what he got. So he's actually reading the book, which is great. And let's see. We have, I don't know if
What's
they're coming
that?
on.
What's that?
Oh, for some, now suddenly I'm not getting responses to my text messages. This means it's not coming on. The app, you just got to go to investorparty.com.
Yeah.
Emily, with the way that I've got the email workflow set up, if you do a presentation at all, like have a PowerPoint or a Word document, just email that to me right after class because I'll have to like upload everything by the end of the night. So that way when the email goes out in the morning, it's already updated. So
Okay.
just a heads up for that.
Will do. I got some slides for you for today.
Okay, cool.
I'm just adding it onto the original one, so you're just gonna, it's just gonna, but I'll separate it for you so that you don't repeat the same stuff over again.
Okay, sounds good.
All right. Okay, then let's get started. So last time we were together, we were starting to get into technical analysis, and we're going to continue with that today. But let's do a quick recap. Anybody want to share what they learned the last time we were together? We also left you guys with a little bit of homework to try to go see whether you could actually do the calculations for that one stock that we looked at on Wednesday. But anybody want to share what they learned from last week, or anybody have any questions before we get started?
It was nice for me personally, like never understanding. I mean, like you understand how to read a graph, but not all the information that goes in it. And seeing just how easy it was to read, 3 clicks up and to make your best assumption as to what to do. Like, it's not as intimidating. Like, realizing just how easy that part is. Now it's just a matter of, do your quick 5-minute calculation and boom, you're done. Hi, Hector. So for me, that was great. And then I was doing some reading up today. So it'd be interesting to see what the stocks do in September, because usually they said a July and August rise means a September fall back. So I guess we'll see what happens.
Yeah. Oh, they have all these isms that they say about the market and stuff like that. But this year, every ism pretty much has been blown out the water. So we'll see if we have a slowdown in September before we have what we call the Christmas rally or Santa Claus rally, where people start thinking about Christmas and shopping and Thanksgiving and all that stuff. So we'll see if that remains true this year. But okay, good, cool. Anybody else have anything else to share about what they learned last week? Any questions? Nope. All right, well, let's.
Bye.
Oh, I heard one.
No, I'm just saying that was me. Don't be shy. We don't bite.
Well, I learned that I can't get my screen to look like yours.
Oh, yeah.
Oh. Yeah, that takes a little bit of time just to be able to maneuver through that software. And are you using the phone version or using the desktop version?
Desktop.
The desktop version. Okay, so it's just a matter of going in to add indicators. But to be honest with you, Kathy, when you get started, the less you have on your chart, the better. If you can just look at those candlesticks and just be able to just look at the picture without having all those extra lines and so on.
Right, but I couldn't get to that point. That's where I was frustrated. I put in a stock and then it just like I couldn't get even to a chart to look at, so
Okay.
I didn't know what's missing.
All right, we will go over that here real quick, but other than that, Esther, can you show how to format your screen on Thinkorswim? Mine is much different than yours. Yep, same thing, Esther. So it's just a matter of adding indicators and stuff like that, but I will definitely go over it and just kind of show you guys some quick how-tos on how to get that, and also where you can get videos on how to design your screen or your charts however you want to design them. So with that said, let's start with what happened with the markets today and then get into our discussion. We're going to continue with the uptrend, the bullish uptrend, and look at some charts and do that same set method again and just get it, until we understand it. So we're going to continue with that. Let me share my screen real quick. Somebody want to let me share? Anybody? Can I share now? Let's see. Nope. Still can't share. There we go. All right.
Got it? Okay.
Got it. All right. So let's do a quick look at what happened in the market today. If you guys remember, part of your daily routine is to get the lay of the land and kind of find out what happened. Why did I go to Facebook? Oh, yeah. FinViz, the wrong F. So, part of your daily routine is to kind of get a lay of the land and find out what happened in the markets with the S&P 500, and then get, do the, get the screener and get the top-down approach of what happened with the markets, and that's, so on and so forth. So, we start with checking the news, right? So you can either go to briefing.com or investing.com or Seeking Alpha, any of those places that I gave you guys last week. You can go, check the news, and then you want to check the economic calendar with with Forex Factory. And then you want to get the broad markets and, determine what your posture is through FinViz. And then you want to look at the heat map, right? So if we go through every one of those line by line, we would start with checking the news, right? And you can even check the news here on FinViz too, if you want. You can kind of get a lay of the land of what's happening with the news. And then you can go to Forex Factory and get the, let's see here, Forex Factory. Where's my Forex Factory? Here we go. You can get your calendar. Can you guys see my calendar?
Yes.
Okay. So then you take a look at the economic calendar and find out what news is coming up this week. So last week we had the Fed speaking. This week it's unemployment week, right? So Friday they're going to report the unemployment rate numbers. So that's pretty much the one thing that's going to be affect the market one way or another in terms of what how the numbers come out. So that's pretty much the only thing that I'm looking at this week. ISM manufacturing numbers and unemployment, ADP non-farm. So this is the non-farm, and then the usual Thursday is going to have our unemployment claims and the number of people that are reporting their claims. So slow news week in terms of major stuff coming out, but also it's always good to get a lay of the land and knowing that, okay, Friday, out of all the days this coming week, Friday will be that major day where we're going to have not reports that might impact the market one way or another. Okay, and then once you do that, check the broad market. So you check the S&P, see what happened with the S&P, check. We can actually do that from FinViz here. If we just go to, you can do that here. You can do that on your broker platform. There's a couple of different places you can get that information, right? So you can get the charts. Let's go. Not groups, but let's go. So here's the top. You have the Dow Jones, you have the NASDAQ, you have the S&P. You can also do it from your broker. So if I go to my Thinkorswim, if you already have your broker set up, you'll be able to just quickly check the news here, right? So here's the S&P. On Friday, we hit an all-time high. Today we just had, it was really just a slow day, really nothing much in the market. And the market, guys, really on a day-to-day basis, it's not so it's not supposed to move 3, 4, 5% every single day, right? If you think of your regular job and what you do for a living, right, you have those days where you have busy days, you have those days where it's a really, really slow day, and then you have those days where it's just a normal business day, right? It's the same thing with the market. Not every day is supposed to be like popping news and breaking news and this and that to make the market move either up or down. Some days it's just chugging along, right? So that's one of these. That's what we had today. It was really nothing major. No big news came out, so it's just really was just another day in the office, pretty much if you look at what happened today with the S&P. The Dow Jones, same thing. We've had a really nice run up. We have, this is what we call a pullback where, it's run up. So now it's just, stopping for some air, right? Before it potentially finds another run up here. So again, nothing major. It didn't break any support levels. It's just another day in the office.
Hey, Emily, I read they switched out a couple of people on the Dow, or a couple of companies. How does that, how often do they usually do that? And how does that usually affect the performance?
It doesn't really affect the performance. They took out, if I can remember, this was last week. Let me see. They took out something and added Salesforce. I can't remember who it was that got kicked out. But they added Salesforce CRM and they replaced it with something else. But really, it does not change the overall performance of the Dow Jones. It's really those individual companies that sell themselves. So it's really more to do with the individual companies than the actual index itself, right? The reason those companies get kicked out is because they're the reason they got added into the Dow is they're no longer performing either fundamentally or whatever the case might be, that got them booted out and replaced with something that's actually performing better, that's got good fundamentals, PEs, and all the other good stuff. So it's really got more to do with the actual individual stock than it does the actual overall index. And let's see. So then this is the NASDAQ. NASDAQ, again, it's just on, this is tech, right? Tech's just on a world of its own. It's just, just chugging along, right? Had an all-time high Friday. And here we are today, just continuing to go up. But again, slow day, nothing major happening. And then we have our small caps in the Russell. These have just been consolidating. Your small caps have just been consolidating for like pretty much the last month, right? And so what you want to look for here is to see if you're going to have a potential breakout or a potential breakdown, right? Because everything is consolidating. So the buyers and the sellers are just kind of, waiting. It's just like, just waiting to see who's going to come in and step up, right? So if the buyers come in and step up, you're going to see it run up. If the sellers come in and sell, you're going to see it come down. So it's pretty much what we call a stock in a box, right? It's just sitting in this range where really nothing much is happening. And this is also a tradable pattern. A sideways pattern is also tradable, right? And when we get into options and all that stuff, we'll talk about how you can take advantage of sideways trends, but this is also a tradable trend in the market as well. And that's about it. Let's take a quick look at gold. I also like looking at gold just to kind of see where the price of gold is. After we had that huge run up and then we had that sell off, it's now again gold is also consolidating, and the same thing, it's in this range, right? So you want to see it either break out of this, break out and continue running up, and this is probably potentially another buying opportunity for anybody who hasn't gotten into gold when it's kind of settled down here, probably waiting to see if it's going to give us another run up there. And silver. Same thing with silver, right? Silver had that same run up like gold did, and then it kind of had that huge sell-off day. And now here we are. Silver has already started to run up. If you actually if you compare gold and silver together, if I was to put this side by side here, and let's put up a chart of gold, you can see that gold is still kind of sitting sideways, where silver is starting to increase momentum to the upside, where it's starting to, to go above these old resistance levels here and start to inch up there. So silver is definitely taking off and gold is trying to take off, but not quite yet. And so that's kind of like how you go about your daily routine and kind of get an idea of what's happening in the market overall, so that you can have a bias as to what you're going to do that particular day. So looking at this and looking at the S&P, looking at the Dow Jones, looking at the NASDAQ, it's still bullish, right? Nothing about the trend has changed to change your posture about the market, right? If the markets are still going up, then your posture will still remain bullish until it's no longer that, right? And then after that, it's to get a lay of the land and look at the different sectors and see how they performed. So let's take a look at those sectors here real quick and see how everything did. If we go back to FinViz, now we can get a lay of the land and kind of look and see, okay, well, we had a bunch of reds, but one thing stands out here. Who can tell me what it is that stands out? What's that one green candle that stands out today?
Apple.
What happened today with Apple? If you guys have been paying attention, what happened with Apple today?
Stock split.
The stock split. You guys do pay attention. I'm so happy. All right, who can tell me what the stock split means, or what happened with the price of Apple today?
They split their shares at a 4-to-1 ratio or 5-to-1?
4-to-1. Apple was 4-to-1. Tesla was 2-to-1. So let's take a look at Apple, because I think that was one of that was one of the things that we were all anticipating to see what it would do today once it did the stock split. So if you guys remember, Friday of last week, Apple was sitting like right around $495 almost. And so what the split did is just change the number of shares you have, okay? The value did not change, but the number of shares changed to equal the total, the same amount. So let's say you had 1 share of Apple before the split. So let's say you bought a share of Apple on Friday, and whatever Apple's price was on Friday, I think it was like $4.95, right? So once the split happened today, you now take the $495 and divide it by 4, and that will give you now the new price of Apple, which is now that one. It was at, let's see what it opened at. It opened at 127. So if it opened at 127, that means the price was right around 508, right? So if the price was at 508 on Friday, and now you did the 4-to-1 stock split, you take the 508 and divide it by 4. So now you have 4 shares at the 127 price range. So it does not change the total value of what you already had. If you already had shares of Apple, all it did is just, it gave you more shares at a lower price, but the total value still remains the same. But what it did for new investors, for people who have been sitting on the sideline because they think Apple was, way too high at 508, and now they want to get in, it just really all it did was just allow you a lower price point. Okay, so now where you couldn't, maybe you couldn't buy shares of Apple because it was sitting at 508 and your portfolio has 10K or whatever the your portfolio has, but based on your rules or based on however you approach trading, maybe your rule is I don't buy stocks that are over 200, or I don't buy stocks that are over 3. Whatever the thing was that prevented you from buying Apple before, well, this just gives you now a new price entry. So if you weren't willing to buy Apple at 5 because you thought it was too overpriced, are you willing to buy it at $131 now? Do you still think it's overpriced? Whether you think it's overpriced or not doesn't matter. This is the entry point that you are now. This is now the new entry point that is available to you if you ever wanted to get into Apple. Does that make sense?
Yep.
So here we are. So at the open, let's go down to an intraday time frame and just kind of see what happened with Apple. So if I go to let's go like a 15-minute time frame, this is what happened with Apple today. So this was the closing price, and it opened. This was the closing price on Friday, and then here's what Apple did today. So it just opened up and slowly was just increasing throughout the day. It hit an all-time high at 131. So if you guys remember on Wednesday, we talked about resistance levels and support levels, right? This is the ceiling, right? This is that new ceiling that Apple has now formed. And now its job for the bulls, right, is to try to break above this ceiling, right? To continue in that uptrend. So intraday, the highest it got was right here at 131. It hit us, it created a ceiling because this is the highest it's ever been, created a ceiling, and then we had a little bit of a sell-off throughout the day. Okay, so now what we want to see tomorrow is are we going to have that continuation where Apple will continue to go up? So back to the daily candlestick, what you want to see tomorrow is that follow through. If you look down here, this is volume. So this is showing you how much volume or how many people participated in Apple today, right? You can see that we had a high volume today. So what you want to see in a trend is that in order for the trend to continue, that continuing trend, you want to see that volume increasing, right? And you want to see those candlesticks, keep green candlesticks going up. And then how you find or how you make resistance is if you see that slowing momentum and you see those candlesticks getting smaller, waiting for it to retrace back and then getting back in again. So that's kind of like, what we're looking to see with Apple. But Apple is Apple. It's just, it is what it is, right? The other one that did a split today was Tesla. Tesla did a 5-to-1 split. But same, you know, same notion, right? However many shares you had of Tesla before, take whatever you had, and now you have 5. And if you didn't, now you had an entry point for Tesla. So going back intraday, and I want you guys to tell me what you see, what the big difference is between Tesla and Apple in terms of the intraday, right? So Apple opened, it gapped up and had that high, it continued up, and then it found resistance and sold off. But now look at Tesla. Tesla pretty much took off where it left off on Friday. It did not have a gap. So it pretty much started green and just went up, you know, for the first half of the day, right? And then we had a little bit of consolidation here intraday, okay? And then towards the end of the day, as opposed to Apple, which had a sell-off, Tesla made its high at the end of the day. So let's take a look at that. Let's look at Apple and let's look at Tesla again, because I want you guys to start to see this and start to understand technical analysis and pattern recognition. So here's Apple again. Apple, this was the close on Friday, gapped open, okay? Continued up until midday where it made a high and then sold off in the afternoon, versus Tesla, which was just, you know, stair-stepping throughout the entire day. So if you were looking at those two and you're doing a little bit of a comparison, right? Which one finished strong?
Definitely.
Tesla finished strong, right? Because Tesla actually made its high at the end of the day, where Apple made its high in the middle of the day and then sold off. If I actually knew how to spell Apple, right? So if we compare them again, here they are, right? This is Tesla's up, made the high here, and this is Apple here, made the high here, and then sold off. So this is just kind of like how you start to look at stocks and just, you know, making a decision as to, okay, where do I want to find my entry point, that kind of stuff, and so on and so forth, and just looking at stocks and how they perform intraday, and on a daily candlestick as well. But, you know, both of them did well. I mean, you know, it's what was anticipated. They both had high volume. If you look at Tesla, same thing. There was high volume coming in. Even if I go to a daily time frame, I mean, Tesla's had high volume since it announced its stock split. Let's just put it that way. Since they made the announcement on the stock split, even when Tesla was trading at 1,000, 2,000, it was still creating new highs, right?
Who else is there?
I have a question.
Okay.
When we're doing the analysis, risk, or the analysis, what's the time frame that you're using to do the analysis? Is it hours? Is it days? Is it weeks?
Well, it depends on the type of trader you are. If you're day trading, you're going to use an intraday, which means you're looking at either 5-minute, 15-minute, or, you know, 30 minutes, whatever time frame you want to use. If you're swing trading, you're going to use a daily. If you're position trading, you're going to use a daily. If you're investing, you'll use a daily and a weekly, because you're going to be in it longer. So the shorter you're going to be in a trade, the shorter your time frame needs to be. The longer you're going to be in the trade, the longer your time frame needs to be. But we always start off with a daily, just to kind of get the lay of the land of what's happening. And then if you're going to swing trade, meaning you're going to be in the trade for, like, you know, 7 to 14 days, you can go intraday to find an entry point. Like, you can go intraday and say, okay, this candle for Tesla was just, you know, huge. It's just green today. Where could I have found an entry point during the day to trigger me in, right? So you can then go and say, okay, I'm going to find an entry point in Tesla if it retraces during the day at some point. So let's say, you know, you missed the entry here at the open and it did this whole run up. When it did this little consolidation here and had this little bit of a pullback here, this could have been your entry saying, okay, I want to see if it's going to continue at making new highs intraday and then trigger me to get in, right? So you could have gotten in at, you know, once it had this little bit of a pullback here, and it gave you confirmation that it was starting to go back up again. If you're day trading, this is all you're looking at. Like, there's nothing else you're looking at. You're looking at intraday, just one day, and that's it. If you're going to position trade, then you use the daily. If you're going to if you're using this as an investor, you want to get more information. So you want to look at longer time frames. So you want to look at a weekly to kind of see, okay, is it still in that momentum where it's going up? So this is a weekly chart where each candlestick now represents 1 week. So this gives you a better idea of, okay, long term, what has Tesla done long term? So it just depends on how long you plan on being in the trade. But we normally start with a daily. You start with a daily, and then based on which direction you're going to go in terms of you're going to be a short-term trader versus a long-term trader, then you either go intraday or you go out more time and do a weekly.
When you make a decision and you decide to buy a stock, how long does it take?
Say that one more time.
When somebody decides to buy the stock, how long does it take to make that transaction happen?
That's the I wish we all had the 8-ball answer for that. We don't know, right? Tomorrow is not promised. We don't know what Tesla's going to do tomorrow.
No, I know, but if I decided to buy that today, or I said, okay, I'm going to buy at this particular time within an hour, does it take an hour to make the transaction happen, or just as soon as
Oh no, oh God, no, it's so quick. It literally can happen within a matter of seconds. Like when you hit the buy button, yeah, that could literally happen in a matter of seconds. But we have search criteria that we follow to make sure that we're looking for liquid stocks and companies that have high volume and are traded often, because that allows you a better entry and a better chance of being filled in your order. If you trade companies that are not liquid, meaning they're not traded by many, they don't have a high volume, then it's going to be harder for you to get that fill. The more volume there is, the chances of you getting filled immediately are higher. So if you look at at Tesla here, for example, this is how much it traded today in volume, right? What this is right here, this is giving you that same number right here, right? So it was 118 million shares traded today, just in Tesla, right? So you have a much, much better chance of getting filled with a Tesla versus, I don't know, let me pick a company that isn't as often traded. So look at this here that has 163,000 shares of volume, right? And then what you want to look at is that bid and ask spread. So if you look here, okay, the asking price to buy, the highest you can buy this stock is 134, and the lowest you can sell this stock is at 99.60, right? So that's almost a $34 price difference, which means trying to get a fill and trying to get a good fill on this stock right here is going to be harder than a Tesla or an Apple, where the bid and ask price is 25 cents difference. Does that make sense? So when we look for companies to trade, that's why I always say, like, you know, a lot of people always think they need to find that brand new company that, you know, nobody's ever heard of to trade, and they don't realize that, you know, those are going to be the hardest ones to get a fill on, especially when it goes down, because when you're trying to exit the trade, nobody wants to buy that from you, especially if it's a stock that's going down. So we always trade companies that are liquid, and I'll give you guys that whole search criteria, because we're going to do that today, and how to scan for stocks that have high volume, liquid, and that kind of stuff. Make sense? So even like an Apple, look at Apple's volume. You thought Tesla was high. Apple had 225 million shares traded today, right? And look at the bid and ask spread between Apple. Tesla was a 5-cent difference. Apple is only 1 penny, right? So the closer these two numbers are to each other, the higher the chance that your order will get filled faster. Make sense?
Yes.
Cool. All right, you guys are asking good questions today. I like this. This is stuff you guys were waiting for. You guys were not asking this many questions with fundamentals. I see what you guys are. All right, let's see. I've got more questions coming in. Okay, that's okay. You, Bo, you handle those questions. I think somebody had to leave early. Okay, perfect. All right, so now that we've talked about Tesla and Apple, because that was the big, big talk for today. And I mean, and one thing I want to make sure you guys understand, right? When we look at the S&P and when we look at the Dow Jones or the Nasdaq or whatever, that's the broad market, right? Stocks themselves can go higher than the broad market. So if you look at the S&P, or you look at the Russell, or you look at the Dow Jones or any of those other different companies, like if we look at the S&P moved 0.22% today. If you look at this number right here, right? So it moved less than half a percent today. If you look at Apple moved 3% today, right? Apple is in the tech stock. So if we look at the at the NASDAQ only moved just about 1% today, right? But the companies within the NASDAQ, like an Apple, moved about 3%. So it's not indicative that when you see the NASDAQ didn't have any movement, doesn't mean that stocks within that index didn't move either. That's when we go in and start to find out those individual companies to trade. Does that make sense? That's just to kind of give you an overall idea of what the market is doing. We're looking for the big picture. So with that said, let's go look at our presentation here. Let me pull up my PowerPoint and you guys can have that. Tell me if you see that. New share. There you go. So this is kind of what we talked about last week. I'm just going to scroll down and just kind of finish off where we left off last week. So last week we were talking about, finding this pattern, right? This is one of the easier patterns to recognize. There are many other types. There are many other bullish patterns that are in the market, such as cup and handles and head and shoulders and all that stuff. But we're not going to introduce those to you right now. What I want you guys to do is train your eyes to find this pattern when you're looking in the charts, okay? Doesn't matter what stock it is, doesn't matter what it's doing, who the CEO is, if you can just train your eyes to identify this pattern over the next, month or so, to start to identify this, it will start to make a lot more sense when your eyes can recognize such patterns, because you can identify support, you can identify resistance, right? This is your resistance, this is your support, resistance, support, and all we're doing is just looking for these patterns so that we can find our entry point, our buying point, to be able to take advantage of the next move, right? So we did this last week, and I think Jake did a quick one just before we ended. Did anybody get a chance to complete this, or at least try to run the numbers for this one? And anybody want to share what their results were?
No go.
No go. Why was it a no go? Who can tell me? So what the entry price, let's do it together so we can kind of have a little bit of a refresher, right? So this stock symbol was, what was it? EQX.
EQX.
Right?
Yes.
EQX. So this was EQX. And then we'll actually go in the chart and actually see it and see if, look at it to see whether it actually triggered or not. So we were looking at EQX and we were trying to determine whether it was a go or a no go, right? And the three things we need to identify is the entry, the stop, and the target. Once we got those three, then we can determine what the risk was, what the reward was, and what the ratio was, right? So let's work together so that we can have a quick, a good refresher, because this is all we're going to do today. We're going to rinse and repeat this until everybody understands this. So if we look at the E, who can tell me what the definition of E is, if you took notes last week?
Where you would buy the stock on that particular day, at that particular time.
Right. So the definition of E was entry, right? And entry, entry is just pretty much the current market price. So last week when we looked at this, the entry price was $12.91. So did everybody get $12.91 for E?
Yes.
Yes.
Anybody not understand how we got $12.91? Speak now or forever hold your peace. Everybody got it. Perfect. So now the next thing we wanted to find out is what our stop loss would be if we were wrong. This is what we call our expense rate. This is like, what if I'm wrong? Where do I get off, right? So who can tell me what the definition of S is?
Stop loss.
And what is the rule for stop
This-
loss?
The support minus 1/2 of the ATR.
Perfect. So what we're trying to identify is if this stock breaks this support level, right? And remember we talked about support and resistance. This is support right here, and then that was resistance. This is support right here, that's resistant. This right here is the current support, right? And then now we're trying to see if it's gonna continue through. So if this is the current floor at 1209, and the rule is half of the ATR under this support level, we have to figure out what the ATR is. And the ATR stands for average true range. And all it is just a measure of how much this stock moves up or down. Okay, so this stock has an average movement of 57 cents. So we have to get half of that, right? So half of 57 is what? 28 and a half, right? So we have to go 28 cents below this support level because you don't want to put your stop above 1209 because what's going to happen is the stock will come back down, take you out of the trade and then go back up again. So your stop has to be below the floor, right? And the reason you have the stop below the floor is that's your net to catch you if you actually break through that floor. So your stop should not be above the support level unless the stock goes up and now you're moving your stop up. But at the entry, when you're putting the trade on, the stop always has to be below the floor. So if you guys want to just kind of get like a little bit like of a reminder, just next to the stop loss, always say right there that it has to be below support, right? It has to be below the floor. So if we're going 28 cents below 1209, where does that put our stop loss at?
1181.
1181. Perfect. Let me see if I can get my little drawing tool and I can actually write on the PowerPoint. Let's see. Yes, I can. Woo-hoo. All right. So let's get my little pen. What color should we use today? Let's go with. All right. So our entry, can you guys see that yellow?
Yes.
All right, so our entry is 1209. I'm putting that at the wrong place. Hold on, let me undo. So our entry is 1291. Ooh, good Lord. I don't have my little stylus pen next to me. Actually, I do. And I put a new battery in it. There we go. Let's make this better. I can actually write now. 1291. So that's the entry. So we said the stop loss is we take the 1208, 1209, which was at the support, and subtract 28 cents, right? Because that's the ATR. This is half of the ATR. So that gave us our stop loss at what price point again?
1181.
1181. So now I'm going to change the color because I want you guys to really get this picture in. So if we're wrong, our stop loss is going to be 1181, right? All right. So now the target. Who wants to give me the definition for target?
Target is you're taking the average of both resistances.
Read for me the rule for target.
I didn't write it down the last time.
Support plus pay.
Support plus pay. Okay, perfect. So now we want to take support plus pay. So we have to identify what support is, and we know support is 1209, right? And then we have to figure out what pay is. So the target rule, so this is your stop loss rule. And so now the target is we have to go 1209 plus pay, right? And what pay is is measuring the last two movements, right? And getting an average, correct?
Yes.
So if we measure this first movement here, the stock went from 1126 to 1265. So how much was that in movement?
$1.39.
$1.39, perfect. And then the second range or the second wave of movement was from 1156 to 1366. How much was that in total movement?
$2.10.
$2.10. So now what pay is taking the $1.39
Right.
plus the $2.10, divide that by 2. What does that give you?
$1.74.5. I don't know if I went out one. So $1.74, 174, or
Okay.
175.
So pay
How do
is
you want to
$1.
call it? Yeah.
That's fine. It doesn't matter. You can be off a penny. That's okay. Doesn't have to be exact as long as you're in that range. $1.74 added to what now?
1209.
1209.
1209. So what does that give us as a target?
Oh, that was good.
1383.
1383. Does everybody confirm it's 1383?
Yes. Oh, I did.
All right. So we've identified what the entry is, what the stop loss is, and what the target is. So now, because we have those three numbers, we can calculate the risk and the reward and the ratio. So the risk, if you want to know how to calculate the risk, is you take your your entry. So your risk will be your E minus your S, and that will give you what that number is. So if we are buying at $12.91, and if we are wrong in the direction and we get stopped out at 11.81, how much are we risking?
$1.10.
$1.10. Everybody confirms that?
Yeah.
All right, so we're risking $1.10. Now our reward is going to be the opposite. So it will be
93 cents.
T minus E. What does that give you? So if you take 1383, which is your target,
92, right?
93.
minus 1291, that's 92, right?
Yeah.
So 92. So if you guys remember when we talked about the risk to reward ratio, in order for it to be a go, it has to be 2-to-1 or better, right? Meaning if I'm risking $1.10, I have to at least make what? $2.20 for it to be a go. So is this a go?
Nope.
Nope, because the risk to reward is not 2-to-1 or better. Make sense? So no matter how pretty the chart looked when we looked at it that day, it's a no-go because of this number right here. We're risking $1.10 to make 92 cents. It's gotta be a 2-to-1 ratio or better. If I'm gonna risk $1.10, I have to make at least $2.21. So it was a no-go trade. And that's really what scanning for stocks is you go through your daily routine, you find some stocks that are going up or down depending on what the market condition is. You run your numbers and then you execute based on what you find. You don't have to trade 10,000 stocks every day. You just find one good one, and this was not a good one, so you probably would have had a few more to look at, run those numbers and come up and find one that's a good entry. Does that make sense?
Yes.
So this was a no-go. Any questions on this?
Do you have a formula for this in an Excel spreadsheet?
Of course we do.
Oh. I was going to say, it's the only way to do it, right?
Yeah, when you're scanning for when you're looking at 10 different stocks, you don't want to sit there and run the math by hand, but it's a good practice so that you can understand how we get the numbers, right?
Yeah.
I don't want to just give you guys the answers. I want you guys to be able to go through and calculate. And quite frankly, guys, the more you do this, the more you're staring at charts, you won't even use that spreadsheet because you'll be able to identify these support and resistance levels so easily with your eyes. And once you know what the ATR is, you'll be able to do that real quick, right? So eventually you won't even end up, using the spreadsheet the more you do this. So the whole idea is to get you guys to train your eyes to find this pattern in the charts often and a lot, and practice the trades. Make sense?
Yes, ma'am.
Yes.
All right. So in continuing with this subject here of a retracement, I gotta clear all that stuff out. Hold on. Because now it's in my next, it's in my next stuff. Clear all drawings. There we go. So let's continue with that. So this is what we're looking at, and I gotta close this up again. All right, bring me back here. So the bullish retracement again, and all I want you guys to just really start to train your eyes is identify that support and resistance level. Support, resistance, support. I'm gonna sing that song until you guys get sick and tired of hearing it, because this is how you start to identify those levels, right? Support, resistance, higher highs, higher lows. The chart is continuing in a trend, right? And these are the things that define that pattern detail, okay? An uptrend is gonna have increasing momentum, meaning when you look at the chart, right, when it gives you another higher high, right, it's increasing in momentum. So if you look at this pivot here to this pivot here compared to this pivot here to that pivot there, this one is stronger. Does that make sense?
Yes.
So if you look at this to here and here to here, this one is stronger. So it's increasing in momentum. The trend is increasing, right? And then we want to look for corrective retracement, that it's going to have a pullback. And then we look for the technical catalyst. And then we look when it starts to slow down, when it starts to come back down, when you see that slowing retracement and you see those small candlesticks slowing down, that means it's getting ready to reverse and bounce back up again. And then of course we look at the volume, kind of like how we looked at Apple and Tesla when we were looking at how they both did today. So here's what those things mean. So when you're looking at an uptrend, right, you're looking for those higher swing highs and higher swing lows, right? And once again, it's that higher high, higher low, right? You want to see that pattern continuing. It's continuing in the same direction, okay? The corrective retracement is when it pulls back, right? It's been going up and then it pulls back, slows down, creates a new support level, and then bounces back up again, right? So you're looking for that to happen. And it usually, it's not always a clean 3 days. Usually you want to see at least 3 days of it going down before it finds support. It doesn't always end up being that way, but that will be like what you would consider like the picture perfect, right? But it doesn't always happen that way, but that's what you want to look for, okay? And then when you're looking for the technical catalyst, is you want the price should be trading near a technical catalyst that can help initiate the change. So you want to look for support and resistance zones. You want to look for those trend lines, those moving averages. This is where we start to add more indicators to the chart, but you don't want to add too many indicators that it just confuses you, right? You can start with the moving average, or draw those lines so that you can be able to see them on your chart when you're looking at the chart, okay? And then when it starts to come back down, you want to see the candlesticks getting smaller. So if you look at this here, we had, a big candlesticks when it was going up. When it started getting to the resistance zone, right, the candlesticks got smaller. And then during the pullback, you had a bigger red candle. And then as it started to find support, the candlesticks are getting smaller, which means the momentum to the downside is slowing down, right? So that's what you want to see in that reversal when it starts to come back down, that you're seeing it slow down. Otherwise, if it continues to go down, then this trend is broken. This pattern is broken. It's no longer an uptrend. So what you want to do is you want to see it coming back down, slowing down, either with candles getting smaller, and then you want to wait for now that signal that it's going back up again, right? And how do you know it's going back up again? When it creates a floor and it starts to reverse back up again. And then the last thing you want to look for is that volume, right? When the stock price is going down, right, the volume is low. When the stock price is going up, the volume is high, right? That just means that, it's just people taking profit. Sellers are coming, but buyers are taking profit. It's coming back down. The sellers are less than the buyers, right? That's what you want to see in an uptrend. You want to see more volume when it's going up and less volume when it's going down. And then when it starts to reverse back up, you want to see that increase in volume. Does that make sense?
Yes.
So that's kind of like what we're looking for whenever we look for that bullish retracement pattern, is just this. If you just write these down and you just start looking at charts and look to see whether you see these indicators, this is what you want to train your eyes on the next, month or two, just looking for these patterns. And just train your eyes, train your eyes, train your eyes, train your eyes, right? And that's what we're about to go do. We're going to go scan and look for stuff. So once again, when we are researching and going through our daily routine and we're looking for this, going back to the beginning, you want to, do what we talked about earlier. You want to, check the trend of the industry and the sector, make sure that the stock does not have earnings coming up, check the news, check the fundamentals, all that good stuff, your personal rules and all that stuff. And then we'll get to journaling and all the other good stuff. But for now, I just want to kind of show you guys how to look for those stocks. And then obviously once you find the stock, it's going to that same thing again, where you figure out what your entry will be, what your stop loss will be, what your target will be, what your risk to reward ratio will be, and then determine whether it's a go or no go and move on, right? If it's a go, you enter the trade. If it's a no go, you find something else to trade, right? So let's go to, so there are a couple of places you can scan for a stock. And one of the places I like to go is FinViz. I actually have a list over time that I've acquired of liquid stocks. And usually I just go through my liquid stocks and just try to find something to trade that particular day. But in terms of just the pattern, even if we don't trade the NASDAQ, I want you guys to just get yourselves accustomed to finding these patterns, right? This is a bullish what? It's a bullish uptrend, because what is it doing? What is the NASDAQ doing over time? It's giving us those higher swing highs and higher swing lows, right? Higher swing highs, higher swing lows, higher swing highs, higher swing lows. And this is a what? What kind of momentum is this? If you look at this pivot here, if we compare this movement right here to this movement right here, is it increasing momentum or is it decreasing momentum? Increasing, right? So that means this pattern is stronger, because from this range right here, let me clear this. Hold on. Clear. Yes. When we look at this pivot here, right? When you look at this run, and then you look at this one here to where we are today. I mean, you can even go back to Friday and say that was this, because this is a breakout here. We can call it here on Friday, because that's where we had that 2 days of slowing momentum from here to here, right? This range is higher, right, compared to this one. So you have what you call that increasing momentum. So even if it's something that's not a tradable instrument, meaning like you wouldn't trade the NASDAQ index, you would trade the QQQ, I just want you guys to just get accustomed to finding this pattern with your eyes, right? And if you're spending more than 2 minutes trying to identify whether it's a bullish uptrend or not, move on. There are so many stocks that are available out there. I don't want you guys spending like, 5 hours staring at one stock, right? Move on. If you can't identify what it is, move on from it, right? But I want you guys to get accustomed to finding stocks like this. Let me show you another one here, like Adobe. So even let's see if I can go back, because I think I had seen, let me see, let's go back a year. Yeah, let's go back a year. So even with Adobe here, just looking at last year, right? This is 2019. From when it found a support level back here in October, higher highs, higher lows, higher highs, higher lows. We had a few weeks of just choppiness when the virus happened, but this has been an overall bullish uptrend. Then we had all this funkiness going on here with the virus. So obviously that would not have been a tradable instrument, meaning that if all you've been doing was trading Adobe during the 2019 period where it was just giving you these new highs, during this time you were out, or you were trading it differently. You were not trying to play a bullish uptrend when it was giving you all this choppiness. You guys see this, right? But once it had that reversal and it started to trend back up again, then it became a tradable instrument, right? And I want you guys to, again, just take a look at this pattern and just see how over time it does get easy to recognize. Higher highs and higher lows and increasing momentum, right? Higher highs, higher lows, increasing momentum. A sell, slowing down, big move. Here we had a little bit of sideways consolidation, but it's still on an overall uptrend. And then boom, there you go. I don't even know what the news was on this particular day. I think this was when, I'm not even sure why it had such a huge gap here that day, but it was probably news related. And boom, there you go. So now here we are consolidating inside this big green candle here, waiting for a technical setup to see whether it's going to continue to go back up again. But you guys see how you can start to recognize these patterns. It's not always going to be picture perfect like how it is in the PowerPoint presentation, but I want you guys to just get used to being able to identify, okay, just looking at this, it's an uptrend, right? This chart is just going up, 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 up. You might get some consolidation in between the uptrend, but overall it's going up. You guys see that?
Yes.
Perfect. So let me show you how to scan for stocks. And we're going to do this today. We're going to do this on Wednesday because I really want to make sure that you guys get this and are able to do this on your own when we're not in class. So if we go to Finviz, also let me show you here, guys. Let me show you something real quick too before I share that. In Thinkorswim, and this is one of the reasons why I like this platform. In Thinkorswim, you can create your own watch list, or you can get a watch list from Thinkorswim that they have kind of already predefined or preset, right? You can go down here. So the personal will be anything that you built on your own, right? Anything here is going to be what Thinkorswim provides. So you can go through, if you're looking for a list of ETFs, you can go through here and go through a bunch of ETFs if you want to find ETFs, right? If you want to go look for stocks that are just in the Russell 2000, or stocks that are just in the NASDAQ or the S&P, you can literally go through and find all those here. You can go through and find your top losers and lovers for the day, right? So here you can go and see, okay, well, which companies did analysts downgrade today, right? Typically, if analysts downgrade companies, typically sometimes they have a down day. Like you can see with AT&T there, it had a downgrade today. With Walmart, had a downgrade, but didn't affect the stock that much. It sold off from Friday. Friday had an all-time high here at 141, but even though it had a downgrade, it did recover throughout the day. So you can go through and find a whole bunch of lists just within Thinkorswim itself. If you want to go top 10, you can go top 10, NASDAQ, companies, or New York Stock Exchange companies, and so on and so forth. There's like a bunch of things you can look for here. You can go here if you want. This is a really cool one. If you want to get post-market movers, meaning stocks that are moving after the market closed. So today the market is closed, and these are all the stocks that are moving after the market closed. One in particular I want to show you guys is Zoom. And the reason companies will move post-market is if they have earnings, or there's news happening with that particular stock, or that maybe sector, or something comes out or whatever. But with Zoom had earnings today. And these, if you see these little telephone lines and this little blue light bulb, it's telling you that something is coming, right? So it's telling you that either earnings is coming, or earnings and their earnings call is coming, or they're going to pay a dividend. Like all these little indicators will be down here in the bottom of your chart. So Zoom today, even before it had earnings, it had an 8% day, right? And it reported earnings after the market closed today. So if I go intraday and look at Zoom, let me see, I have to add, I have to have it show me after hours. So let's go to, is it an appearance? No, let's go equities. So, and I know I moved really fast. If you use Thinkorswim and you want to be able to see what's happening in the chart after hours, this little settings tool right here, the chart settings tool, if you click on that and go to equities, you can click this button here that says show extended hours trade session. If you add that, you'll now be able to see what's happening with the stock after hours. So here is your Zoom. So Zoom, prior to the market closing today, closed at around $320 a share. Earnings, it reported earnings. Obviously, the market loved whatever earnings news it reported. So here are the numbers. It was estimated to bring in 34 cents a share. The actual numbers were 92 cents a share. You guys, I'm gonna put it back on again, and it will bring up that little note thing right there. So you guys can see that, right? So obviously it brought in more revenue than expected. So it beat the expectations. The market loved it. And so now this is all the stuff that's happening after hours. So I don't know where it will end up before the market opens tomorrow at 9:30, but this is where Zoom is right now. So this would be something for you to prep and look to see once Zoom opens tomorrow and gaps up. You don't immediately trade it the moment it opens up. You want to wait to see whether it's going to consolidate intraday, right? So this might be a good one to day trade tomorrow. I don't know, but this is how you start to prepare yourselves for the next day by looking to see which companies are moving overnight, because that means that there could be a potential play tomorrow when the market opens. Tesla is moving overnight. You can see here, Tesla closed at about 500. And right now we're at 515. So you can use the list. You can create a watch list within Thinkorswim, or you can go scan for yourself, right? So once again, if you just go to the to your watch list indicators down here, anything personal is what you've created and saved. And then down here, you can literally go and find stocks to trade within what Thinkorswim provides here in their own platform. If you want to go scan for yourself after you've, gotten the gist of fundamentals and you know what to look for and so on and so forth, you can then go to like a FinViz and scan for your own stocks. So if I go back to FinViz and go to here where it says screener, can you guys see that? You guys see my FinViz?
We're good. Yep.
Okay, perfect.
Yes.
So you can go in here now and you can be descriptive as to what you want to look for. You can describe what you're looking for fundamentally, technically, and so on and so forth. Now, the thing about when you go to these free sites, you're going to get a lot of pop-up ads. So you just have to deal with that, but you're getting really valuable stuff from a free website. So If we start with the descriptive and you're looking for something that is going up, this is what we're talking about. You know, we want to trade companies that are liquid and are, you know, are traded by a lot of people. So this is where you start to filter in that information. Okay. You can always start, and then if you have a longer list of companies, you can always go back and make adjustments as you go if you want to look at fewer companies. Okay. So the less you have, the more you're going to get in terms of the results here. The more descriptive you are, it shortens up the list. Okay. So one of the things that I like to do is trade companies that are that have a large market cap, right? So I don't want to trade small market cap. I always want to go mid or more, right? So I want to go mid, meaning over 2 billion in market cap. And then average volume, the most important thing is average volume. You want to trade companies that are liquid. Now, you can go, I usually start with over 500 and then filter it down if I have a lot, but you can start with 1 million, 500 or anything. But, you know, whatever rule you come up with, stick with it, right? But you want to find companies that are liquid. So we can go over 1 million and kind of see what we get. If we get a shorter list, we can always reduce that to 500. So that's the average volume that you want to trade, that you want to be able to look at. The next thing you want to be able to filter out is the price, right? You don't want to trade penny stocks. So you want to trade something, you know, maybe I would probably say like over $10 to start off with. And again, depending on what we end up getting, we can always filter that out. But let's go with over $10. Optionable and shortable. This is really important when we start getting into options, because if you get a list, and let's say you get like, you know, an Amazon or, you know, even a Tesla, still Tesla at $500 is still maybe expensive for some people. You might be able to trade it as an option. So you want to still, even though we're not talking about options right now, we're trading options right now, you still want to be able to filter it out, because if it's not a good stock trade, meaning that, you know, it's too expensive as a stock price, you can always play the option, and we'll talk about that later on as we go. So that's one of the filters you can do. So we've gone we've reduced our list to 858, but that's still too much. So now let's go to fundamentals, right? Fundamentals is now you know, you want to now look at companies that, you know, either have a PE ratio of a certain, you know, a certain number or whatever. You can filter this down if you're looking for long-term companies to invest in. You can, you know, do all that stuff here. But because we're looking for something to trade, like a swing trade, I'm not going to be too concerned about the fundamentals. I'm going to go to the technicals. The technicals are more important for me. Okay. So now the technicals is I'm looking for something that is trading up. Okay. So if I'm looking for something that is trading up, I need it to be above certain moving averages, right? And the most moving averages that we use are the 200, the 50, and the 20. And what the moving averages are is just telling us, you know, what is the price this stock is trading at, you know, at the 200 within 250 days and 20 days. So the 200-day moving average, I want the price to be above it, because it means it's telling me that the stock is above the 200-day moving average, right? I want it to be above it. The same thing for the 50. I need it to be above the 50-day moving average. And I want it to be above, I'm going to start with above the 50-day, the 20-day, and see what we get out of that. So now we've brought our list down to 370. We can even get really technical and find certain patterns, right? We talked about patterns and looking for retracements and so on and so forth. You can now come down here and say, okay, I want you to give me stocks that are only doing a head and shoulders pattern or a channel up or whatever. You can actually now go through and identify what what exactly you're looking for. Okay. So I can go, okay, I want something that's in a channel, because that will show me that this stock is going up and it's staying in a channel, right? So we can go and look at that. So now we're down to 58. So now that I have this list, I can actually do one of two things. I can look at it here in the charts, within Finviz, or I can take this list and copy it and put it to Thinkorswim. However you want to do it is entirely up to you. So all you're looking for now is what? Is those bullish uptrends, right? Now you can go through a list of 58 and just glance at it and see, okay, can I identify a bullish retracement within these different stocks, right? And you've got 58 of them. If you're more comfortable doing this in your software, you can click on the tickers. Once you click on the tickers, you can then literally just highlight them, right click and copy. And then you can go to Thinkorswim. So let me see if I can do a new share. Go back to Thinkorswim. And now I can create a watch list. I'm going to call this Finviz Scan. And then I'm going to import, and you have a couple of choices. You can either, if you already have like maybe an Excel spreadsheet that you put them in, or you can just literally just paste them and say, okay. And boom, there they are. So now I can save this. Oh, I think it copied the title. So now I can go here. So now if I go to my personal watch list, here you go. We have our Finviz Scan. So now I can literally go through, it's 58 companies, and I can go through them one by one. Let me change this to a day time frame, and I can go through them one by one. So I'm gonna quiz you guys, and you guys tell me whether you see a bullish retracement or not, okay? Akamai, you guys see a bullish retracement, yes or no? And if it's too confusing within like, a few seconds, you can always say pass. There's no right, you don't have to spend, 10 hours looking at one thing. If you can't tell it, pass.
Yeah.
All right, we'll pass.
Yep.
APTV, I have no idea who they are, what they do, yeah or nay?
Yes.
No.
No.
I heard a no, I heard a yes.
Yes.
Okay, for the yes, what did you see?
Can you say a bullish retracement?
Mm-hmm.
Yeah. So,
So
at the end, it's going down a little, right?
So, and again, we're not concerned about where, what it did, 5 years ago, 10 years ago. We're looking at the current trend, right? So I'm going to zoom in. And now tell me if you see a bullish retracement. Is it giving you higher highs? Is it giving you clear higher highs and higher lows?
Ish.
Ish.
Yeah.
Ish, right? So I would say that it's almost like a neutral stock. It's almost like neutral-ish. It did attempt to break out here and kind of fell off of that. What I wanted, what I would have liked to see with this breakout here, right, is for it to have a pullback. And you see how the candlesticks on this 3 days were like slowing down. I would have wanted it to see it bounce off of here, right? Because this was the run up, right? This was the run, the pullback, right? And even this pullback here, and if the pullback here came back to an old resistance level, so I like that as well. Okay, but now we want to see, and then it's consolidating again. So we want to see if it's going to continue to make new highs. So it hasn't given me that clear higher high quite yet. Does that make sense? So we have the first one. The second one is not looking pretty, right? So we have, I would want to see something more. And then the past year has just been kind of like it's been sideways. So I would want to see something more cleaner. Make sense?
Yes.
All right, so moving along. ATH.
No.
Yes.
No.
Yes, no, yes, no. So here,
Yeah.
wave 1, wave 2, still could possibly make a way through. And remember, it's not going to be, you know, like picture perfect textbook the way we're looking at that PowerPoint presentation, right? This is still consolidating. It could still continue to go up. So it has not formed that second wave yet, right? But this is what you're looking for, is you're looking for that pattern, right? Just higher highs, higher lows. Is it constantly, continuously giving you that, right? So we're looking now, this could be a potential if it breaks above that 38. But what you're looking for is just those higher highs, higher lows, higher highs, higher lows. BBY, Best Buy. Bullish, uptrend? Yes, right?
Yes, yeah.
So, you know, from the lows of, what was that, March, it's just been going up, going up. It had gap over here. I'm not even sure what the gap was. It had earnings here. It had good numbers, gapped up, and then literally gave back all those gains from the earnings report. So now it's consolidating, and we want to see if it's going to what? Continue to give us those higher highs and higher lows, right? So right now it's not
It's thinking.
it's thinking. There you go. It's trying to think, but it had a really huge a really huge run up. This is huge in terms of the momentum, right? It's increasing momentum from from July, a whole month of it going up. So yeah, it needs to take a break and breathe and think about what it wants to do next, right? Billy. Overall uptrend, right? This is picture perfect.
Yeah.
Higher high, higher low, higher high, higher low. You guys see that?
Yeah.
And it's all day long, right? Now it's been choppy, traded sideways the last few days or the last few months,
But it's
right?
got-
It's been kind of sideways, but you guys can see that it's in an overall uptrend, right?
Right.
So that's what we're looking for those for those patterns, right? And then now here we are kind of choppy, waiting. It's it's gotten like a little bit sideways here, but I want you guys to just get used to these patterns here and recognizing them. So even here, there's a pullback, made a higher high. Oh, come on. Higher high there. So we could be making another what?
Another support.
Another run.
And another
And
run.
it could be forming
Another
support
run.
here and then giving us another one, right? So this is what you're looking for, is just that pattern right there. And sometimes it's harder to see it in other stocks than others, right? And that's why I said if it's too choppy for you, then just move on. I literally just ignored that one because it's no longer that trend, right? Here we were, higher highs, higher lows, increasing momentum. Oops, I overextended that one. That would have been down here and then there. And then now it's completely broken that trend because of this right now. It pulled back way too much. And you can see the volume here increasing as it's going down. Remember, you want to see volume decreasing as it's going down and increasing as it's going up, right? So that would be a no.
Hey, can I add something on that by chance?
Sure.
Go back to that chart. What is that chart? BLDP.
BLDP.
Cool. One thing that can I draw on your screen? No, technology's not
Can
that
you
good,
know?
is it?
Let me stop share.
Okay, I just want to show one thing, guys. And I don't know, maybe this is helpful, maybe it's not. But let me. When you're looking for something that's going to turn around, that's kind of what we're looking at. It's nice to see it slowing down. So let me share this screen. So same stock, right? I won't get into wave counts at the moment, but you can see expansion, contraction, expansion, which is bigger than the previous, contraction, expansion. Now on the contraction, let me zoom out so you can see it again. When this came down, a lot of times you'll have a 3-wave count to the downside. So there, if you guys want to write this down, don't get stuck in this rabbit hole, but it's a part of technical analysis called Elliott wave. So you can get into wave counts. So things tend to move in sequence. It's like a cha-cha-cha. So it's a 1, 2, 3, 4, 5, and then you have a 3-wave cha-cha-cha. And the cha-cha-cha is really a contraction. But you can see right here, you're going to have a 1. That's a big one. And then you have back up and then a little one. Do you guys see how this move is far more dramatic than the second move? That means that the momentum to the downside was stopping. So let's say if I was somebody watching this, not only is this a previous ceiling over here and here, and it was still in an uptrend, but it had that 1, 2, 3 type of corrective wave, but we saw the size of the down moves be much smaller, which for me is like, hey, that means it's not having the same type of downward momentum that it previously had. Then what you're seeing is this nice move, 1 up, 2 down. 3 typically tends to be one of the bigger waves. The third wave is typically the biggest wave. And then 4, 5, and then it does a 3 count cha-cha-cha. But you don't really need to know that. What's nice to know is that visually you can see momentum. At first it was falling big, then it was falling less. And if it's falling less, then it might turn around, and guess what? It turned around. So when you're looking at those waves, they do have a lot to do with momentum. When you're a buyer, I like to see things like this. Like if I would want to buy this one right here. Why? Because this wave was bigger than this wave. It means they're getting bigger. That means they're running faster. There's more momentum to them. If I'm buying something that's turning around, I typically want to buy it after it's slowed down in direction. So again, if you're buying something down here, it fell hard, fell soft. At this point, I don't mind trading something that's turning around. Does that make sense? I don't know if I'm communicating
Yeah,
well.
no, yeah, and that's one of the, like, and we
been a
we
long
talked about
day.
recognizing different patterns, and that's what you would consider to be like a W pattern, where you see it double bottoming and creating a W for winning. So we'll introduce that when we do that, but I just want you guys to just get comfortable finding that bullish retracement, so however you want to scan, whether you want to use the the watch list from Thinkorswim, or you want to use a scanner from FinViz, just get comfortable looking for that pattern, right? And just identify it. So your homework is to go either using FinViz or Thinkorswim or whatever your broker is, and identify those patterns, right? Whether it's a past one or a current one, to me, I really don't care, but I just want you guys to start to be able to identify that trend. Does that make sense?
Yes.
Any questions about scanning or looking for stocks or anything like that? I mean, the list goes on and on and on. We're not going to go through all the different stocks, but the list goes on. I want you guys to just be able to just find the trend and identify it. If you can give me a higher high, a higher low, increasing volume, slowing momentum, increasing momentum, that kind of stuff is what I want you guys to start to recognize.
That's a pretty chart, by the way. That's what you want to see. That's a nice little small consolidation. If we see a really big green candle off that little candle, man, you buy that. You don't even think twice. I don't even ask what I'm buying. I just buy it. That's what, yeah.
Yep. I think I saw something in the chat. Was that a question?
Yeah, she said trends within for how long of a time frame?
What's the question again?
Like how long
do you have questions?
you want us to look at, I guess, for like analyzing is what she was trying to say, I think.
So for now, I just want you guys to start identifying trend, right? When it comes to actually entering the trade and triggering and all that other stuff, we'll get into that. But I just want you guys to just get used to just finding trend. If you want to, condense the time frame so that you can be able to actually look at it as a potential play, then I would say maybe, I'd say 2 months at most, so, cut that like that, or at least where you can identify that trend. Does that make sense?
Yeah, but
So you don't wanna-
where are we seeing that that's 2 months that we're looking at?
Oh, I'm so sorry. Okay, so down here, so remember we talked about the axis, right? So this is your price axis. This is where the price of the stock is. And
Mhm.
down here is your time axis. So right now, when I zoom out, we're looking at an entire year, right? So I can cut that and say, okay, I don't care what Netflix did a year ago. It's irrelevant to me right now, right? I care what it did, after the pandemic. And you can just zoom in and go, okay, give me every data point after, April. So now you're looking at from April to August.
I had a little question that was off that topic, but like back to when it was like when markets make a jump at night, how do those candles get evaluated at night if nobody's trading at night?
Well, remember we are companies are not just traded in the U.S., right? We have other markets. We have international markets. We have the Asian market. We have the European market. We're all connected, right? And then you have all these hedge funds that they're pre-orders from the market before the market closed. So before the market closes, there are all these pre-orders for different companies and stocks, right? So somebody may have an order for Netflix to buy, like, at when it's above a certain price point. So that drives the price overnight.
Oh,
And then
okay.
when the European markets open and the Asian markets open, by the time we get to the US tomorrow at 9:00, right now the Asian markets are open. The European markets will be opening in like 3 hours. And then we get to our markets tomorrow, and then we trade until 4:00.
So if you want to trade any earlier than when the U.S. market's open, you got to go overseas.
No, you can ask for aftermarket trading privileges if you wanted to, but for the most part, a lot of people just trade. They trade the normal hours, but you can trade the futures. The futures are a 24-hour market, and Forex is a 24-hour market. So the futures right now are open for tomorrow. The futures open at 6. They go from 6 p.m. to 5 p.m. and they close for an hour and then restart. So the S&P futures right now are trading. This is essentially tomorrow's candlestick, right? This is where we close it. This is tomorrow's candlestick. So what you'll see when the market opens tomorrow, now when you look at the S&P, wherever this started with the futures is where the S&P will show overnight. So if I go intraday with S&P, you can also see what it's happening.
It will show that same type of candlestick.
Yeah.
Gotcha.
Okay, my internet is starting to act slow. It's not letting me click stuff. Hold on, there we go. Intraday. So here's what's happening with the S&P overnight. You can kind of sort of see it, but you have to do that. You have to set that in your Thinkorswim to show you the overnight extended hours. So if you don't have that checked, you won't see it. If you have it checked and then you go intraday, you'll be able to see it.
Cool. Yeah, I wanted to ask that earlier.
Sometimes on earnings announcements, hey, check out Zoom. Did you see what happened with Zoom over the last?
Oh yeah, we checked it out earlier.
Oh, okay. It's at 400. Did you see it? It closed at 325. It's up 75 points overnight. It's crazy.
Yep.
So it's the world we created for ourselves just never turns off, which is interesting, but you just find the time to sleep whenever you want to sleep, Derek, is my answer. But everything's always trading because they all affect each other.
I'm so tempted to talk about an earnings play that we talked about on Zoom today, but I don't want to get into options, especially when we've done all this technical analysis today. So I will save that for another day. But there are so many ways to take advantage of stocks that you're expecting to have a big movement during earnings that you can actually take advantage of it, because it's a bi-directional trade where it doesn't really matter which direction it goes, whether it goes up or down. With options, you'll just profit from it moving, right? But it has to move a lot. So Zoom is going to be a perfect example when we start talking about options and how you can actually use options you know, for things like earnings trades and stuff like that. But that's not for tonight because it's already 9:40 and you guys have had quite enough. So we will end here. So your homework tonight is to go and scan for stocks either through FinViz or through your broker platform. Again, you'll be able to find, and I'm not sure about other platforms, but at least with Thinkorswim, you have, you know, you have these lists here that you can go through and kind of be able to find some companies and some stocks here as well, or through FinViz. Sounds good.
All right.
All right, guys. Well, I think we will end it here and we will catch you guys on Wednesday night.
Sounds like plan. Jacob, you got anything you want to say before we go? Yeah, nay, no. All right, then. If you're free tomorrow or Friday afternoon,
He's in the room, Bo.
I'm in for Party Chatter. The links are under Investor Party. So feel free to join us on those calls. Jake was on today. It was great. What did he say, Matthew? Sorry.
He's in his room.
Okay.
He's on the phone.
And yeah, I guess that will be it. I'll have an email out tomorrow with the link to class if anybody needs to rewatch it. It'll also be posted on our tribe page. So yeah, that'll be it. Any questions, you can always reach out to myself, Jacob, Jake, Emily. So let us know and have a good night, everybody.
Awesome. Bye, guys.
Good night.
Bye.
Bye, y'all.